afternoon.
Good afternoon, everybody. Welcome to the Office of Tax Appeals. This is the appeal of Strong Agronomy Incorporated. And before we go on the record, some housekeeping matters. My name is Tommy Leung. I will be the lead judge for this appeal. With me today are Judge Suzanne Brown and Hearing Officer Seth Elsom. Together, we will be deciding this appeal as equal partners. Some more housekeeping stuff. This appeal is being live streamed, so we advise everyone to avoid speaking about personal, confidential matters such as addresses and social security numbers, that sort of stuff, because that will just go out into the public stream. This broadcast is being recorded to prepare an electronic transcript. And for this purpose, we ask that everybody speak clearly at a normal pace and to please not speak over each other. Best practice is to mute your microphones when not speaking. We do have Mr. Story. You'll be representing the corporation, and I will have you all introduce each other once we go on the record. But just to let you know, sir, that I will be swearing you in because probably you'll be going into areas that will have you testifying about what happened during the time period involved here. Any questions from anybody? Mr. Story, any questions from you before we start?
No, sir.
Okay. Mr. Thalhuber, any questions from you?
No questions from me, thank you.
Okay, so let's go on the record for the appeal of Strong Agronomy Incorporated. This is OTA appeal number 2410-17708. The taxable year is 2020. The issue to be decided is whether there was reasonable cause for the appellant to pay his taxes late. And we have about 10 minutes for appellant's presentation plus 5 minutes at the end for rebuttal. And we have 10 minutes for the Franchise Tax Board. During the pre-hearing conference for this appeal, exhibits were presented by both parties. For the appellant, it was assigned exhibits 1 through 4. Exhibit 1 was the appeal letter, and then on November 22nd, 2025, it submitted 3 more exhibits, which included the refund claim. We had some articles regarding an entity known as Herbal, Herbl, and we have some court pleadings regarding some insolvency proceedings. For the Franchise Tax Board, they submitted exhibits A through I. Neither party objected to each party's exhibits, so they are being admitted into evidence into the record right now. So without any further ado, I would ask that the parties introduce themselves, beginning with you, Mr. Story.
Yeah, my name is Darren Story. I'm the Chief Financial Officer for Strong Agronomy Management, Inc.
Thank you, sir, and welcome to the Office of Tax Appeals. And for the Franchise
Thank you.
Tax Board?
Yes, good afternoon. This is Tristan Thalhuber, and with me is Brad Coutinho on behalf of Respondent Franchise Tax Board.
Thank you, Mr. Thalhuber. Before you begin, Mr. Story, please raise your right hand. Do you swear or affirm to tell the truth and nothing but the truth? Yes or no?
Yeah, yes.
Thank you. You can put your hand down and you may begin your presentation. You have about 10 minutes.
Okay. So we filed the taxes and we had money owed, but at the same time, we went into protracted COVID ordeals where, businesses were just not functioning properly. During that time and the preceding years following, We had several companies that owed us large sums of money go out of business. We had to sue them. One of them was Bird Valley. We sued them. That case ended up getting resolved for no money. Like we took whatever assets they had left available, which was a delivery vehicle worth $14,000. So we had almost a $500,000 owed to us, just basically down the drain because they were insolvent. Um, and then we had another distributor, Herbal Inc., which was a much publicized company. They were heavily investor funded. They also went out of business, owing us that one. They owed us $160,000, and there's several other cases very similar to this. It's well publicized that the California cannabis industry is in dire straits right now. The state last year, the legislators actually had to give a tax break to the industry because no one could pay their bills. The CDTFA themselves are owed billions of dollars of unpaid taxes. People just aren't paying, unfortunately. So you can understand the issues with our industry, and in the franchises tax board's opening statement, they said that one of their solutions was that we should have just basically paid them and gone out of business. I don't think that that's considered to be prudent or reasonable. I don't think any reasonable business person would consider just paying taxes and going out of business to be a reasonable business move. So I don't think that that's a good solution. They also claim that we got a $900,000 employee retention credit, which we didn't. We never received anything from the IRS. That credit is still submitted. It's not gone nowhere. The proposal I had made to the FDB originally, before they offered me a payment plan, was that if we got that ERC, I would gladly pay it, but we never got the ERC, and we had no liquidity to pay the taxes due. Eventually, someone, and they never gave me an alternative. They never said like, "Oh, can you get on a payment plan or anything?" It's just like pay this amount, which we don't have any money, or suffer the consequences. Eventually, someone from their collections department got a hold of me, who was great, and suggested a payment plan, which I never knew was an option, and we fulfilled that. We actually paid it early, and because we were becoming stronger, and now we're on pretty good footing. And despite the industry is still collapsing, we've been able to kind of muscle through it. And I've submitted some exhibits that can be read and shows how some of the players in this industry were insolvent that owed us so much money, and how it was virtually impossible for us to pay the taxes. And that's kind of where we were. That's kind of where we are. Yeah, that was my main points. Is that we didn't have the money, we didn't get the ERC, and we filed the statement of financial condition showing that if we were broke and if we had the ERC, if we get the ERC, we'd gladly pay them, and we just never did. So that was a pro forma statement of financial condition, which is what the instructions clearly asked us to do, is pro forma. So that's basically it. So we paid him as soon as we could. We felt it was unusual business circumstances, the culmination of the COVID. No one can get their supplies off the ports. They didn't, basically commerce ceased to exist. And we paid them as expedient as possible in a prudent and reasonable manner. And I really think that the reasonable cause is clear in this case.
Okay, Mr. Story, is that your presentation?
Yeah.
Okay, before we go any further, I forgot to mention that today is January 15th, 2026, and the hearing started approximately 2 p.m. Mr. Thalhuber, do you have any questions for Mr. Story?
I do not have any questions. Thank you.
Okay, I will turn to my co-panelists. Judge Brown, any questions for Mr. Story?
Not at this time. Thank you.
Okay, you're welcome. Hearing Officer Elsom, any questions for Mr. Story?
Hi, Mr. Story. I did have just a couple questions. And it looks like, according to your testimony and the exhibit that you submitted to OTA strong agronomy, excuse me. It's got two liabilities. One is for over 560,000. It states that you filed suit on October 4th, 2022. And the second was for 160,000, and that was the liability due from Herbal Inc. I was wondering if you could kind of reconcile for us the fact that your entity reported income of over 800,000 for the tax year at issue, with your liquidity position at that time, meaning was most of the year that income tied up in receivables, or can you just provide a little bit more explanation as to your cash position at that time?
Yeah, we had cash in the beginning of 2020, but as the year wound down, people just stopped paying their bills. And so by the end of the year, we were pretty much broke. Like by the end of Q1, 2021, we were pretty much flat broke. And these taxes didn't get filed till October. By then, we were like completely out of money. So these are just two examples of, distributors who owed us a bunch of money, and I mean a bunch of money for us, maybe not for some people, but we basically live paycheck to paycheck. So the liquidity just wasn't there, and I feel like the whole industry kind of thought that 2020 was kind of like the glory years for California cannabis, and I feel like they kind of thought that it was going to be sustainable, and it just blew up, and it blew up quickly.
Okay, thank you. No further questions for me.
Okay, I'll hold my questions to the end, and I'll let the Franchise Tax Board, Mr. Thalhuber, please begin your presentation. You have 10 minutes.
Thank you, Judge Leung. Again, this is Tristan Thalhuber on behalf of Respondent Franchise Tax Board. The issue in this appeal is whether appellant has established that its late payment of tax is due to reasonable cause. The law requires FTB to assess a penalty when a taxpayer pays the taxes due on their return late, unless the taxpayer establishes that their failure to timely pay was due to reasonable cause and not willful neglect. For the 2020 tax year, there is no dispute that FTB received full payment of appellant's tax reported on its 2020 tax return over 2 years after the due date. Therefore, FTB properly imposed a late payment penalty. The late payment penalty may be abated by a showing of reasonable cause, which requires that appellant show that its late payment occurred despite the exercise of ordinary business care and prudence. Here, appellant requests abatement of the late payment penalty based on the assertion that despite being profitable in 2020, it experienced financial hardship in 2021 and 2022. Appellant also indicates that it has filed lawsuits against multiple distributors in 2022 and 2023 due to the failure of its distributors to make required payments. While the financial inability to pay taxes timely may constitute reasonable cause for a late payment, appellant must show that despite the exercise of ordinary business care and prudence, it was either unable to pay the tax or it would suffer an undue hardship if it had to pay the tax by the due date. Here, appellant has not provided sufficient evidence to show how its financial difficulties in 2021 onward made appellant unable to timely pay its 2020 tax liability by the payment deadline. Appellant has also provided no argument or evidence of reasonable efforts to conserve funds to timely satisfy its 2020 tax liability or sufficiently estimate its liability prior to the payment deadline. Appellant has also not provided evidence of its financial condition prior to the payment deadline or that it would have suffered undue hardship had it paid by the due date. As such, appellant has not established that its failure to timely pay its tax was due to reasonable cause, and thus it has not established entitlement to abatement of the late payment penalty. Therefore, Franchise Tax Board respectfully requests you sustain its position. Thank you, and I am happy to answer any questions.
Okay, Judge Brown, any questions for the Franchise Tax Board?
Yes, I may have a question.
Go right ahead.
Thank you. I would like to ask Franchise Tax Board what kind of documentation it would expect appellant to provide that would establish efforts to conserve funds, or otherwise would establish undue hardship due to its vendors, or other debtors not paying amounts owed to appellant?
So there's not a specific list. However, some information that could be helpful in that analysis would be bank balances prior to the payment deadline, perhaps cash flow statements prior to the payment deadline, correspondences between the appellant's financial representatives, discussing the expectation of a tax liability based on the 2020 tax year, based on the 2020 profitability of the company. So these are just, a few examples.
Okay, thank you. That was my question, my only question for right now.
Okay, thank you, Judge Brown. Mr. Story, I'll get to you in a minute. Hearing Officer Elsom, do you have any questions for the Franchise Tax Board?
I have no questions at this time. Thank you.
Mr. Story, I know that you have your hand raised and you have a question, but you can rebut right now. So just let us know what your thoughts are.
So the argument that Tristan just laid out is a moot point because he never asked for any of this information. I spoke to him on the phone, and also in his initial opening comments. This is all new stuff. He never mentioned it before. Like, oh, why don't you show me your financial condition before? I mean, you could look at our 2019 tax returns. We lost a bunch of money that year. 2020 was the only year we actually ever made money. We lost a bunch of money in 2021. It was our worst year ever. In 2022 again. So all of this stuff could have easily been provided. I think I did actually, when I filed my statement of financial condition, I think I actually did remit bank account statements. So they do have those showing the very little funds we have in our accounts. So he does actually have access to all that information. And again, like, this is reasonable and prudent. Like any normal business would have done the same thing, especially during COVID, especially when everybody that owes them money is going out of business. And we're just trying to, we also did a massive layoff in early 2021, just doing everything we could to try and cut costs and stay afloat. I'm happy to provide all those EDD claims if he wants, and we could show you the staff that we had to let go of. Yeah, it was pretty brutal. But again, I spoke to him on the phone. He never asked for any of this stuff. I also, in his opening brief, doesn't mention any of these things that he just argued. So I think this is just, a phony argument, to be honest.
Okay, I'm sort of curious myself. Mr. Story, you had mentioned earlier in your presentation that you had received an offer in compromise from the Franchise Tax Board.
No.
That's who you sent your pro forma statement of financial condition to get that offer in compromise?
No, but I never received an offer of compromise. I called them a bunch of times, and they told me to send in the statement of financial condition. They asked for all this stuff. They asked for bank account statements, all this information to kind of see how we were doing our financial strength.
Yes.
But they basically just said, too bad. I didn't get an offer of compromise or anything else. That I was appealing. I don't know. I forget what the process was. I had to contact quite a few people because they kept either leaving their position or no longer being able to be contacted. So I filed all this stuff with them to try and get an offer of compromise, but they just basically told me, no, screw off. You got to pay the taxes.
Okay. I think I read somewhere in the file that you received from the IRS an abatement of the penalty. Am I correct in that?
They never penalized us. They never, I don't know if it was an abatement or what. I looked it up. I thought that there was an abatement, but I looked through all my IRS letters they sent, and they never sent us a penalty letter.
Well, when did you pay your federal 2020 taxes?
I never did.
You never
I don't
did.
know. Yeah.
Huh.
I don't really know exactly what happened with those. We sent in two ER. The IRS is crazy. They're challenging to understand exactly where the money goes and comes, but it's a little bit convoluted. So
Mm.
we're an agricultural employer, so we typically file a form 943, and most employers file form 940 for payroll taxes with the IRS. And so when the opportunity to file for an ERC came out, there was 2 tax years we could do that for. I think it was, I don't remember the tax years. It might have been 2020 and 2021. But anyway, we filed for 2 ERCs, but then it was noticed that our payroll company had filed 940s when they should have been filing 943s. So they had to basically cancel the 940s and refile a 943. And then we had to refile for the ERC. And I think, I don't know, but I think what the IRS did is they gave us the ERC for one of those years. So we put in two, one for 2020, which was like kind of moderate, and then one for 2021 which was the significant one. And I think that the IRS basically had this tax liability for 2020, and they rewarded an ERC for 2020 and just washed it out, because I don't know. They never gave us a penalty. They never like bug us for taxes or anything. And the person who was trying to get the ERC for us, he called the IRS a bunch of times, and he said that there's no tax liability for at all for any of those years. And I received like tons of letters because we had to go back and forth with the 943 versus 940 filing. So initially they give you a big, when you cancel the 943, they're like, oh, you have all this money in your account. Or you cancel the 940, you're like, oh, you have all this money owed. And then you file the 943, and then they use all that money to basically pay the taxes again. So it's really confusing, but all I know is that they like never gave me a penalty, and there's no taxes due.
And so you don't file an 1120 with the feds, right? The regular corporate return?
So that's a corporate return. The 940 and the 943 are the payroll taxes.
Mm-hmm.
Yeah.
So
So we file an 1120S, I think, or 1120, something like that.
Okay, and were there taxes owed on the 1120?
Mm-hmm. Yep.
Did you pay those on time or no?
No,
Okay.
I never sent any money to the IRS.
Okay.
They somehow like washed it. And all I can think is that they used the first ERC to just pay themselves. I don't know how else it got paid.
Okay. Let me go to the franchise tax board. Mr. Thalhuber, you've heard things about the taxpayer submitting application for the offer in compromise. So do you have any documentation from that filing at all?
At this time, I don't have any documentation regarding the offer in compromise. I believe the taxpayer was, in his opening argument, was referring to the installment agreement that was offered.
Okay.
Yeah.
So do you have any information about the installment agreement?
Well, I believe that in response to his protest of the late payment penalty, that was when further information was requested, at which point the statement of financial condition was submitted.
Okay. Have you looked at that?
Yes, I have. I don't recall the exact details of our conversation that Mr. Story referred to. However, I do recall receiving the statement of financial condition. I reviewed it. However, I noted that the statement of financial condition states assets and liabilities as of July 2023, not
Ah,
prior to the payment deadline.
okay. So you're looking for information on or around April 2021.
Yes, that is correct.
Okay. I think based on what I've heard, I'll let my co-panelists ask some more questions if they have any before I um, give you my final thoughts. Judge Brown, anything further for either party?
Not at this time. Thank you.
Okay. Hearing Officer Elsom, any questions for either party?
I have no additional questions at this time. Thank you.
Okay. I think the feeling from what I gather from my co-panelists is that we would probably want to give Mr. Story another opportunity to submit information to the Franchise Tax Board to see whether he qualifies under what sounds like being described here as financial hardship. And I think the regulations, federal 1.6161, 1.6651 refer to that. And I think Mr. Thalhuber touched on it about undue harsh financial conditions would qualify for reasonable cause if proven. Mr. Story, I think you were on the right path about the financial statements, but for what Mr. Thalhuber is telling me, they need information as of the due date of your taxes, which is April 15th. No, April, it would be around May 20th of 2021. So we would need information about that, including bank statements, the financial condition of the company to see whether the degree of financial harm that the company was facing. And don't need to take too many notes. I'll write this all up in an order. I'll send it to you folks in writing. But basically, that's the gist of it. Mrs. Story, I'm gonna give you 30 days to do that. And I'm gonna give the Franchise Tax Board 30 days to respond. Then I'll give you, Mr. Story, another 30 days after that to give your final thoughts.
Okay.
Mr. Story, is that enough time for you to gather that financial
Yeah.
information?
Yeah, absolutely.
Okay. So we're talking about the period around May 5th, the due date of the IRS and the franchise both postponed the payment date to about I think it was May 17th, I want to say. So, during the period of May 2021, when the payments were due, what the financial condition of the corporation was. Um, um, like I said, pro forma financial statements, bank statements, and whatever else you can provide to the franchise tax.
Okay, yeah, I can send all that IRS communication as well, so
Okay.
you can kind of see it.
Yeah. So
We never paid them. Yeah.
okay, we'll let the franchise tax board figure that out, and of course, send copies to us. Mr. Thalhuber, are you on board with this?
Yes, Franchise Tax Board's happy to review any additional information. Absolutely.
Excellent. Glad to hear that. So we will hold the record open until the our request exhibits and review is complete. Like I said, it's a 30-30-30 type of review. I will be preparing an order so you guys will understand what we're looking for. And so that will conclude our business for today. And of course, let OTA know if you have any extensions required or more time needed. Let us know in writing, and we'll let you know how to do that in my order. And if there are no other questions, we will hold the record open and we'll conclude the hearing for today.
Okay, thank you very much.
Okay,
Have a
you
good
both
day.
have a great day. And for the audience, our next hearing is scheduled for 3 p.m.